Markets off lows to trade in the green. Nifty above the 21,400 mark. Sensex higher at 71,400. Mid-caps trade in the red.
NDTV Profit's news break confirmed SpiceJet has expressed interest for Go First, marking a significant change of fortunes for the cash-strapped airline company.
Sony says it has not yet agreed to Zee's proposals, adds that it is looking forward to hearing Zee's proposal.
The Karnataka government has made it mandatory for people above the age of 60 to wear masks in public places. This comes after a growing scare of COVID-19 subvariant in Kerala.
And around 500 passengers are stuck in a railway station in southern Tamil Nadu as heavy rains batter the state. Good afternoon, you're watching Market IQ. I'm Tamanna Inamdar, and with me is my colleague Pallavi Nahata. Let's begin with how the markets are looking this afternoon, and they are in recovery mode after a pretty flat and tepid kind of a trade all day today. You've seen a pickup in the last few minutes, in about last 20 minutes or so. The Sensex nearly 200 points up off its day's lows as we speak, but the trends remain the same. IT is still hurting. It is your worst performing index today on the Nifty. Meanwhile, energy and FMCG stocks are in flavor. Energy especially. So a whole host of news coming in on that side. You've had crude prices going up because of the crisis in the Suez Canal, and we're going to be having a conversation on that a little later in the show. On the other hand, windfall tax has also been reduced. Those cuts have come in from the government. So what's topping the energy list? Adani Energy up about 3%, NTPC, RIL and Coal India all doing pretty good in that energy pack. Just going to talk about a few movers of the day before we go on to the other stories, and one of them is what we're talking about next, in fact, which is SpiceJet. SpiceJet has expressed its interest in bidding for Go, the airline, the beleaguered airline. It's a story we broke yesterday and we spoke about it on Market IQ, and that stock is up 2%. In fact, let me go across to Vishwanathan Nair, my colleague who broke that story yesterday. So, Vishy, yesterday we spoke about two bidders, one of them being SpiceJet, but they're not the only interested party in this whole arena, isn't it? The question now is what the creditors of Go are looking for.
Yeah, you're right, Tamanna. So as we discussed this yesterday, Safric, which is an Africa-based investor, and Sky One, which is an aviation expert or aviation consultant based out of Sharjah, they are both interested in putting up a joint front for SpiceJet. All of these bids for Go First, apologies for my mistake, but all of them put together are still in conversations with the lenders and the resolution professional, and unless the lenders give a nod, the resolution professional cannot entertain these offers. At this stage, of course, it's only interest. Once the lenders give their nod, there will be a due diligence by all of these bidders, and then potentially there could be an offer on the table. But yes, at this point in time, the lenders are debating whether it's even worth going for this entire discussion, whether there is any point in entertaining new bidders, because remember that last month already an entire bidding process has gotten completed and the lenders were looking at liquidation for Go First. That's because no other bidders were showing up for the airline at that point in time. So now with these new bidders coming into the fray, the discussion comes back to whether it's even worth the entire effort.
Thank you.
Thanks a lot, Vishy. Now, moving on, Zee Entertainment has requested Sony India to postpone the effective date of their merger. Sony has stated that it has not yet agreed to the deadline extension yet. Sony India, in a statement, has said it wanted to hear Zee's proposal before deciding on an extension. Tamanna? What's the latest happening on that?
So this is a very interesting story, and it's going down right to the wire, Pallavi. It's got all the makings of, and because it's in the context of Zee and Sony, all the makings of a potboiler, a blockbuster, Pallavi, or if you want to look at it like a cricket match, because 21st is the deadline, right? 21st December is the deadline on when they have to complete this entire deal. Zee has said, please extend the deadline. Sony is saying we've not got real confirmation or communication from Zee. We don't necessarily have to. And they've indicated that they could rethink the entire deal. It's all at the end of it stemming down to who will run the merged entity. Will it be Punit Goenka or not? And after all of the legal loopholes this deal has gone through, we'll have to wait and see what's happening. I just want to take a look at the Zee stock today, which has been responding quite negatively to the news. And yeah, off its day's lows, I would suppose. Down about 3.5% now. It had gotten beaten down even further. So one interesting story to watch out for. Now, hotel operators are confronting a challenge that threatens to steer diners away to standalone restaurants and uneven GST structure. Sesha, who tracks this space, is joining us to give us more details. Now, Sesha, as I understand it, the problem is that if you go to a hotel and dine, you pay more taxes than if you go to a standalone restaurant?
Right, absolutely. So, there is a disparity in GST rates, and it has been a bone of contention for a long time now. But the matter is becoming more serious, with hoteliers losing out on the potential revenue opportunities, as well as seeing their market share taking a hit, with the growing tendency of consumers to order from, Zomato or Swiggy during their stay. So while restaurants inside hotels that attract 18% GST are allowed to claim input tax credit, the industry argues that the mere perception of a higher tax at a restaurant within the hotel discourages customers to to look for alternative options. So even if the prices on the menu are lower compared to the standalone restaurants. Now, a basic back of the envelope calculation shows that, for instance, if the customer dining at a standalone restaurant pays say, for example, rupees 100 in GST for a rupees 2,000 rupee meal, the same meal at a hotel restaurant would attract a staggering 360 rupees in taxes. Now, while this difference won't really matter much for consumers staying in luxury hotels, it is the mid-market hotels, where consumers are more price sensitive, and this market is facing a demand issue. And, factors such as ambience, luxury, quality of service is often overlooked by guests focused on budgetary constraints. Now, this is according to the mid-market players that NDTV Profit has reached out to. The industry is questioning why a hotel room should have any significance with dining options. And the consensus is clear that restaurants inside hotels are patronized by walk-in guests too, and not just by the in-house residential guests. So they should have the freedom to compete on an equal footing with standalone restaurants.
Thanks a lot, Sesha. Now, moving on, in a fresh bout of geopolitical concerns, Houthi militants are attacking vessels passing through the Red Sea and the Suez Canal. Now, ships are being targeted with drone and missile attacks, because of which 7 out of 10 shipping companies will not be traveling via the Red Sea. What we need to remember is the Red Sea is an extremely critical trade route, and because of these developments, we've seen recent upticks in crude price as well. We have with us Ajay Sahai, Director General from the Federation of Indian Exports Organizations, and he's going to help us understand what does this current crisis mean for India. Hi, Mr. Ajay. Thank you so very much for taking time out. To begin with, can you just help us understand if there are going to be any repercussions for Indian trade and Indian exporters because of these developments?
7 of the top largest shipping line, they have said that they will not be touching the Red Sea, and that has caused much concern for the Indian exporter. It has created uncertainty, because if ships are not plying, India's export to some of the Asian countries, to Europe and to the US may be affected. We have been given to understand that as of now, the insurance risk premium for the ships have gone up. Even for the marine shipping, which is routed through Red Sea. Insurance company have added it. There's little war risk charge which has also been added. So even if the ships are plying through the Red Sea or if they are plying through the Cape of Good Hope, the freight cost is likely to go up, and so is the voyage time. So little disruption in trade is definitely on the card. And we are hoping that since US has said that they have formed a coalition which will patrolling the area, we expect the situation to normalize quickly. If that happens, it will help the trade. Otherwise, there is a lot of uncertainty as of now.
Mr. Sahai, could you also help us understand, like you've mentioned that there will be a little bit of an uptick in shipping insurance costs as well as the time taken for, all of these shipments to now reach us. Could you help us get some sense of what is the lag we're now looking at and what's the increase in premiums we're looking at?
In fact, as of now, what we had given to understand is that freight rate is likely to go up by around 25 to 30%. We have to see it because a lot of oil export is also happening through Red Sea. The entire export of Saudi Arabia to Europe and India's exports go through the Red Sea. So if the situation persists, even the freight may go up further also. Exports to, as I told you, to many of the Asian countries, particularly to Egypt, Sudan, Jordan, Eritrea, and other countries may also suffer a little setback, and so is to Europe and US. I think all depends on the duration of this crisis. We expect the crisis to be resolved quickly, and if that happens, there will be some temporary setback. But if continues, then probably this is coming at a very bad time when we are already seeing huge headwinds into the global trade.
Mr. Sahai, good afternoon. Tamanna here. Great to be speaking with you. You're talking about headwinds to global trade, but I'm trying to understand what proportion of Indian exports are actually exposed to this particular route. And, how much of an impact are you seeing? Because today, if you see all your shipping stocks are upwards, the general sense and statements coming from them is it's not going to bother us too much. I'm wondering what the picture is from the exporter's point of view.
In fact, if you are looking into the product profile, a lot of petroleum or crude exports happen through this route. Palm oil is being exported, so are the cereal. And the route accounts for roughly one third of container. So all products which are being exported from India to many countries in Asia and even to Europe, they are routed through that. So whether it's machinery, whether it's, you can say chemicals, they are all high-end engineering products, vehicle, all will be affected because containerized cargo is largely through this route when we are exporting to many parts of Asia and also to Europe.
Yeah, absolutely. Thank you so much, Mr. Sahai, for speaking with us. Trade premiums can go up and shipping costs can go up to 30% if the situation is not managed. The hope is that this 10-country coalition headed by the US will calm things down. You've been seeing attacks on shipping vessels, the latest being a Norwegian carrier with missiles and drones. So quite a scary situation there. A very quick break. On the other side, we have an interesting story coming up. The IPL auctions begin from today. Who is bidding for whom and at what price? We're going to come back with all of those details. watching Market IQ with me and Pallavi. Market's looking in fine fettle at this point. And, the big picture has been the world looking at India and potential for growth. In fact, the International Monetary Fund has come out with a report where they've deemed India as, quote-unquote, a star performer. It's a story that Pallavi has been reporting on and tracking. Pallavi, why have we got this A+ grade?
So, Tamanna, like you said, the IMF came out with a consultation paper. It's an annual consultation paper that they come up with around this time of the year. And this time as well, they had some of the key takeaways from that was that growth in India is expected to continue to stay strong, supported by macroeconomic and financial stability. The IMF also did say that the country's foundational digital public infrastructure and the continuing strong thrust that we've seen on capex is going to help bow up growth. It's also commended both the government as well as the central bank. While the IMF has commended the government for their prudent macroeconomic policies and reforms, the central bank, it is said, the RBI, has continued to focus on price stability. It's done a fine job of bringing down inflation, though of course some headwinds to inflation continue to remain. Interestingly, the IMF also believes that despite India seeing fairly strong growth, India has the potential for even higher growth, and that remains conditional on structural reforms, especially on the labor and human front. Another thing I'd like to add, Tamanna, is that the IMF, like it's been doing for a while, has continued to emphasize on India's need for fiscal consolidation given India's debt levels. That's something we've consistently seen even rating agencies talk about, that, despite a fairly strong macro picture and extremely strong growth credentials, public debt and the need for consistently reining in fiscal deficit and moving towards fiscal consolidation remains key.
Yeah, and that is a stated aim of the government, but we need to account for the pandemic years when, some of those targets had to be loosened, like in most of the world, not in India alone. Talking about keeping your budgets in check, a clutch of people today are definitely going to be looking at how much space they have in their purses, because the much-awaited IPL auctions are underway in Dubai. This is the first time the auction is being held outside India, with 333 players set to go under the hammer. NDTV's Rika Roy is joining us with more details. Rika, thank you so much for speaking with us today. Tell us, what are the bids looking like and who's the top pick?
Well, Tamanna, good afternoon to you. Good afternoon to our viewers. The paddle war has just begun in Dubai. It's the first set of bidding that's going on right now, so we wouldn't be able to tell you who's the top pick. You'll have to wait for about 3 to 4 hours now to find out who's the top pick. But let me tell you that these mini auctions are interesting because you see prices really go through the roof. Remember, last time around, it was one of the English players, in fact, who had taken home 18.5 crore rupees, Sam Curran, and he became the highest paid player from the IPL auction. So you can expect some of the prices to go through the roof. Those are the numbers on your screen that will show how much money each team has in their price purse. Gujarat has the maximum, that is 38.15 crore, and they will like to do some quick and big buys, given that they have let go of Hardik Pandya. Hardik Pandya, through a very dramatic transfer, has gone back to Mumbai, which was his original franchise. They have a new captain in Shubman Gill. Also, we'll have to really see about auction strategies of the franchises that have really remained at the bottom of the table last time around, like Mumbai Indians. They have a new captain this time around in Pandya. So we'll have to see what strategies Mumbai come with. Of course, on the screen, you have those numbers telling you how much each franchise has left in their purse. Lucknow has the least. So this auction will go on roughly for about 6 to 7 hours to determine what kind of key buys that these guys will do today.
Thanks a lot, Rika. We'll circle back to you in a while to find out exactly how the auction goes on. Now, moving on, here's yet another NDTV Profit exclusive. We learned from sources that the Commerce Ministry is working on a new scheme for manufacturing of ACs. Janani Janardhan joins us with more. Over to you, Janani.
As you rightly said, there is a new scheme perhaps on the anvil by the Commerce Ministry for super efficient air conditioners. Now, this is still in the draft project report stage, wherein the government is looking for more partners, multilateral partners, and the aim is to sort of bring in viability gap funding, R&D, and capacity building for these super efficient ACs. Now, what is the potential really? As the global temperatures are rising, there's always a more need for the air conditioning industry. Particularly, the World Bank now estimates that the Indian AC market is going to be a 1.6 trillion one, with the right kind of manufacturing setup, and the investment opportunity could just take off from here. Now, if you remember, there's also a PLI scheme for this very particular, niche, the air conditioning market, called the PLI for white goods. And as of last year, we had 26 applicants, including some famous.
Thank you for that, Janani, there with a new PLI scheme focusing on cheaper air conditioners. Now, Accenture is set to announce its October to December earnings later today. The company's revenue is up by 2.9%. We have our colleague Tushar Deep Singh joining in with more details. What will the street be looking out for, Tushar, on a day when the tech pack is really not doing well at all?
Thank you so much, Tamanna, and good afternoon to our viewers. First up, Accenture is going to announce its Q1 earnings. The company follows a September to August fiscal. So the quarter that we are talking about here is September to November only in the case of Accenture. So what analysts are saying is that revenue will be up 2.9% over this period. Compared to the previous quarter, it is still worse because in the previous quarter it was a 4% up. Consensus EPS estimate is at $3.13, up 1.6% year on year. What we want to watch out, or what Indian IT companies will be watching out for, is the guidance that Accenture gives. Earlier, at the end of the Q4 quarter, Accenture had said that it anticipates to grow at 2 to 5% in the year to August 31, 2024. That was again a pare down of its revenue growth expectations from 4.6% earlier. Now, why is it important? First of all, Accenture is the bellwether. It's the biggest IT company which has its bearings in both the services part of the business as well as the consulting part of the business. So essentially, it's like a litmus test for the Indian IT companies which will report their earnings in January. Tamanna.
Thanks a lot for that. We'll stay in touch for more updates on that. Meanwhile, everyone has to wear clothes. It's perhaps the most basic act of daily living. But we never consider how scary it can be for those with disabilities. Buttoning shirts can be a challenge. Tight fits won't accommodate diapers. Regular placement of pockets does not work for those in wheelchairs. How can fashion be more inclusive? As a part of the Samarth by Hyundai initiative, we take a look at what adaptive clothing is all about.
This action may look simple, but it alone can become a daily reminder of inaccessibility for people who have disabilities. Soumita Basu is keenly aware of the significance of accessible or adaptive clothing for people with disabilities. She was struck by psoriatic arthritis, which affected her body muscles from the age of 28. This condition made the simple act of sliding clothes on and off quite challenging for her. And that is how Zenica Inclusive Fashion was born.
You can see this something like a yellow top behind me. The yellow top is something that, a caregiver can help a person wear without having to move any part of her hands or anything. She can just sit and it just opens up and the caregiver just, wraps it around. That's as simple as that. We have show buttons. We hide Velcros under it or magnets under it. So, it just opens and closes like that. So we have, as I said, the zips are there. With just one finger, you can take it up and down. Flap openings, where men, particularly elderly men, I make sure my pockets are at such a place that you can access them while you're sitting or standing. The whole mantra of my brand is that your clothes are meant to fit you. You're not meant to fit your clothes.
While Soumita's and her mother Amita's work is often showcased in exhibitions like this one,
this is the website of Ekansh Trust.
Anita Iyer Narayan's collected designs are available online. Anita is a disability rights advocate and the founder of the NGO Ekansh Trust. Her unique online catalogue features 15 designs of functional adaptive clothing chosen from a pool of 52 submissions by fashion design students from across the country.
These are very, very simple solutions. So instead of, and also if a caregiver is taking care of you, so can we have the buttons at the back so that you don't feel very embarrassed about somebody dressing you up. So the zipper could be to the side so that everybody's dignity is respected, if I can put it that way. So that is what our catalogue basically intends to do, to just give the choice back to the person with a disability and the caregiver, and they can have it tailored anywhere.
Designer Anju Modi doesn't have a clothing line for people with disabilities. Instead, she works with each client individually to create clothes meant only for them. And every year, she and some of India's other top designers participate in this fashion show, organized by the Fashion Design Council of India in collaboration with the Tamanna School. Its purpose is to raise awareness around a more inclusive approach to fashion.
I've been involved with Tamanna since last 7-8 years. Every year we present a collection, and then every year we are associated with one special child and we make clothing for that person. These kind of initiatives should be more often be brought into limelight so that more people get involved.
Clothing is a powerful tool in defining who you are as a person. Clothes should bring comfort, confidence, and also dignity, not be yet another barrier to accessibility.